Towards the end of last year and extending into the beginning of this one, technology and other growth stocks have been buffeted by volatility post the Fed pivot. Markets have been nervous about inflation rates and the prospect of higher interest rates to come. And what that's done is shine a light on valuations, particularly in the highest growth areas within the market that had reached levels that left really little room for error. That's something we've been talking about for a while and why the portfolio has been positioned somewhat more conservatively for much of the past year. The good news is the technology story hasn't changed. And while markets have been more volatile, technology fundamentals remain strong. Valuations have also meaningfully reset, having been elevated for much of last year. And so within the portfolio, we've begun to take advantage of recent weakness, increasing the growth profile of the portfolio by adding a number of higher growth stocks. The beauty of investing in the technology sector is that it's a broad and dynamic one. And for as long as I can remember, the portfolio has been built around 6 to 8 core themes. And right now, we've been focusing on what we believe to be the most important beneficiaries of the pandemic period. For example, cloud computing, where this period has seen companies embrace cloud at an accelerated pace. And so big positions in the portfolio, the likes of Google, Amazon and Microsoft really dominating public cloud computing. So investing in companies involved in the networking side of data centers and also a plethora of semiconductor companies that benefit from more servers, but also more compute that's necessary if we're going to really harness the benefits of machine learning and AI. We continue to like the software sector, which has been a long-term favorite of ours. Although last year we cautioned that valuations had reached levels that made us somewhat uncomfortable. We've been able to take advantage of that weakness and adding some new names that had previously eluded us on valuation grounds. While the near-term outlook for the tech sector may be somewhat less certain post the Fed pivot, our own medium-term enthusiasm remains undimmed. From our perspective, we continue to see the tech sector take more share of global GDP. We continue to see disruption occurring across a myriad of different areas and industries. And we continue to see the large part of our portfolio delivering strong results. While the pandemic has been an accelerant for companies to adopt technology, we believe the digital transformation is far from complete. And the reason that these transformations continue is not just because they're multi-year in nature, but because ultimately the internet and smartphone-driven tech disruption shows no signs of abating. We are also encouraged by recent technology earnings that have remained strong, despite market volatility. And so for all of these reasons, our own medium-term outlook for the technology sector remains very positive.